Hello, everyone. I'm your host, Cam Webster, and welcome to The Art of Boring, the podcast where we dive deeper into Moore's investment philosophy and thinking in order to help you, our listeners, become more informed investors. Ultimately, we hope to connect you with the people at Moore who find excitement in delivering on Be Boring, Make Money. On this episode, we speak with equity analyst Karan Phadke about his experience interviewing management teams. We reveal why assessing management team strength is so important to our investment philosophy, list some of the key characteristics we look for, and explain the difference between an architect and an administrator. Thanks for listening.
This podcast is for informational purposes only. Information relating to investment approaches or individual investments should not be construed as advice or endorsement. Any views expressed in this podcast are based upon the information available at the time and are subject to change.
Today we're joined by Karan Phadke, who's an analyst, equity analyst with the Global Small Cap team. And we're here to talk about the art of the management interview. Before we get to that, Karan, welcome to the podcast.
Thanks for having me.
You're welcome. And what we want to give listeners is just a little bit of your background. So this is your first time on the podcast. So just give us a little bit of overview of your experience in investing and how you made your way to Moore.
Yeah, sure. So I guess I've had more of a long and winding path relative to some to end up at Moore. Just for context or background, I grew up in South Africa. So I was there till I was 18, and then I moved to Canada, went to U of T. And after that, I did U of T in actuarial science and math and stats. So that was a little bit removed from investing, I guess.
How big was that class?
Well, the funny part is it started off with 100 and ended with 30. So in first year, they sort of tell you, oh, look to your left and look to your right. One of you is not going to be here in 4 years. So it was pretty funny.
Wow.
That's the intro. So yeah, it was pretty small class. Interesting time, but I wanted something more, I guess, business related. So when I graduated as a management consultant for a couple of years at A.T. Kearney, and that involved a lot of sort of strategy and finance work, but also working with private equity funds, help them out with due diligence. So that was a couple of years. And then after that, I joined CPP Investment Board in Toronto. And over there, I was part of a thematic investing team. So this was long-term, market-neutral, global equity.
Did you have to be a Canadian citizen to be
I was already a Canadian citizen by then,
okay.
Yeah. So luckily, I didn't have to find out if. But I don't think you do because they have global offices. So yeah, that was really interesting, and my first forte, I guess, into public market investing. So I did that for a couple of years, and then I had known Jeff Moe, who works at Moore, for a little while when I was doing that, and he introduced me to Paul and VJ, and that's sort of how I got my first leg in, I guess, to Moore. And 3 years on, here I am. I spent a year in a Singapore office, so that was a lot of fun. Got an opportunity to meet, I guess, management teams from different cultural backgrounds and in different parts of the world. And now I'm back in Calgary for good. Okay,
thanks for that overview. And maybe we'll weave that Singapore experience in probably to the subject we want to cover. So again, for listeners, we're here to talk to Karan about the art of the management interview. But before we do that, just set up why management is so important to our investment philosophy.
Yeah, so I think management, probably it increases in importance based on three categories or three areas. And the first is, as you extend your time horizon or your holding period, people begin to matter a lot more. So that's one sort of dimension to think about how important is management to assess. The second is the size of the company. So the smaller your team, the more impact each individual will have on the culture and the outcomes. So that would be the second one. And then the third one is the portion of earnings that they retain. So if a company retains a lot of earnings, that's owner capital and they're going to reinvest it. So you better have some good stewards of capital to reinvest that for you. So I think management's really important along those three dimensions. And in general, I think the value of having good management teams is that they provide better skew. So what I mean by that is you tend to create more surprises to the upside versus the downside if you have good people at the company.
Okay, sorry. So you said skew.
Yeah, SKEW. Yeah. So the distribution of outcomes hopefully tends more to more positive things versus negative things.
Okay.
So that's what I mean by skew. The second is that they extend growth runways. So they create opportunities to expand the business in intelligent ways. And then the third, again, is they increase the durability of the franchise. So hopefully they can build this business for a long time and you can get cash flows many years out into the future. So those three things are really important sort of jobs of management. And in general, the better the management team is at doing some of these things, the slower you want to be at selling the security as it reaches sort of your estimate of intrinsic value.
Okay, well, we could probably end the podcast there because I think you covered it all. Maybe we can go from that great overview that you gave us into how do we go about that? Like how do we take those key characteristics and how do we ask the right questions?
There's two components to that. The one is, well, what are some of the factors or the dimensions you want to assess them on? The next piece is, well, how do you actually assess that both empirically and qualitatively? And then the third piece is, well, what do you do with that, right? So I think just in terms of the attributes, it's helpful to have a framework on how we assess them. And I think at More, we sort of have a guideline on some of the key attributes that we look for or factors we're thinking about. So some of these would be alignment and governance is one, culture, strategy, capital allocation, execution, and risk management. So that's a pretty comprehensive list, and it's almost a checklist to go through. And on each one, try to understand how management is doing. And in general, the idea is to get a sense for how and why they make the decisions they do, as opposed to what the tax rate is going to be in a specific quarter. And the way you do that, again, on each of those, there's both empirical tests that you can do using financial or operational metrics, and then there's qualitative ones, which is, okay, what do they say they do? Have they tracked against it? And things like that.
Right. So within our philosophy, assessing word and deed is what I'm kind of hearing you describe. Let's dig into a little bit more of the details. So for listeners, let's give them an impression of how often we conduct a management interview. So in any given quarter, let's take Global Small Cap, for instance. How many management interviews would you do in a quarter as a team?
Yeah, so I track the number of interviews that I do on an annual basis. And as an example, last year I spoke with 176 companies. So quite a lot. And that works out to maybe one every couple of days at least. So on average, every week I'll at least have one management interview, whether it's to assess a new company, speak with an existing holding, or do scuttlebutt, as we like to call it, on something related to a company that we own. So that would be me. Across the More platform, we systematically track and share our notes. When I did a sort of count on our internal database in 2017 across the whole team, so that's all of More research, we conducted almost 1,200 unique interviews. And over the past 5 years, we've done over 6,000 unique management interviews across the platform, across everyone. So it's quite a few.
Right. But everyone's different. You got to think 6,000 interviews, everyone's different.
Yeah.
You gave us kind of a list of things you try to get at. So I want you to describe, Karan, is within those 6,000 interviews and those key characteristics we want to get at, do you have a standard set of questions? Like, what do you typically ask a management team, or how do you prepare? How do you nuance each question and go from there?
Yeah, so I think it depends from person to person. But in terms of the preparation, it's really important when you are first meeting a management team that you build rapport and that they don't necessarily feel like you're wasting their time. So it's very important to prepare before it. And for me, that would involve obviously going through the company's public filings, but it could also be going on the website, YouTube, customer review websites, just to get a sense for the product, what people are saying about the product. And then also reading competitors. So what are they up to? What are they saying about the industry? And a lot of the time, because we've accumulated sort of these 6,000 plus interviews over the past 5 years and even more over a longer time horizon, typically on any given company, we may have already spoken with them before, or we've at least spoken with a competitor or another company in the same industry in a different geography. So you can review those as well, just to get a sense for what this business does. So that would be some of the preparation involved up front. I do have sort of a guideline on the types of questions or general categories that I like to ask so that I can go through comprehensively, what I'm looking for.
Do you have a favorite within there? Like, have you gravitated to this category I like to ask often, or?
Yeah, so one of my sort of favorite questions is around customer satisfaction and customer loyalty. So I like to understand, one of the questions that I would ask is, how do you measure customer satisfaction and where can you improve? So that would be an example, or even a broad question like, how loyal are customers? And then seeing how they respond and seeing what they have to say about it. So that would be one example. A couple other quick ones would be, which functions in the business could you outsource if you really had to? And the purpose of that is to understand, okay, where is the value really being generated in the business versus what are the ancillary activities that support that? So that's trying to understand what capability drives their competitive advantage. A couple others would be how much time or money would be needed to copy your products or services. Again, related to the moat of a company. Or what are the 3 most important financial and non-financial KPIs on your dashboard? So again, what does management think? Our KPI, key performance indicator. So it would be what does management think is critical to the business that drives value? And then the last 2 as an example would be when do you choose to build versus buy? So how do they make that decision of, okay, I'm going to buy an asset versus go greenfield, or something like what are common mistakes you've seen others make in the industry? So this would be to get a sense not just of how the industry works, but also what management sees as a fatal flaw that they try to avoid, and whether they have a good understanding of what can break the business or the risk management side of it.
Okay. Sounds like tough questions. If I were a CEO, I don't think I'd want you to be asking me those questions.
Well, I think the general idea is at least I'm not trying to grill them. It's just trying to get inside their heads to understand how they think about the business and, again, why and how they do things, as opposed to getting specifics around like what happened in the quarter. So it's just getting a flavor for like why they do the things they do.
Do you ever lead with that? Like, excuse me, Mr. or Ms. CEO, but the reason I'm going to ask you these questions is I want to understand how you think.
No, I've never actually led with that. Yeah, I've never led with that. Usually I just jump right into it. And sometimes it could be an innocuous, supposedly naive question, but you can get a lot out of it. So an example would be if a business has really high returns on capital, you could ask, well, look, your returns on capital are really high. Why haven't they come down? Like everyone else in the industry doesn't do as well. What's the secret sauce? And sometimes a broad question like that, and you just pause and listen, you can get a lot out of what they actually believe are the drivers of the business.
Technique-wise, what do you find is the most effective in terms of, maybe you just gave us an example, but I'll pause and listen to your answer now.
So it's interesting that a lot of different people have different perspectives on what you could use as technique. Some rules of thumb that I've picked up from colleagues at Moore, so guys like Christian, who's our deputy CIO, Stas, who works on the US team, is particularly good at providing feedback around this, would be, an example would be having open-ended questions. So throwing in a combination of open-ended and pointed questions is a good technique. Often you want to ask an open-ended question, but then dig deeper. So follow up on the question and see where it takes you, as opposed to going from sort of question to question on your list. That would be another example. The third one, as you mentioned, would be listening to the point of being uncomfortable with the silence. So sometimes, often when you ask someone a question, they'll have a quick couple seconds where they've got a scripted answer, frequently because they've gotten that question before. But once they've run out of that scripted answer, then sometimes the truth can come out. So you want to pause and just reflect and digest it and see if anything else comes out. So those would be 3 sort of quick examples on techniques that you can use. But again, it's important to be mindful of them, but at the same time, not be too preoccupied with sort of the way you ask questions, as opposed to just trying to answer or refute your thesis.
Right. I'm interested, Karan, in maybe we can dig deeper, as you just said, and talk a little bit about your experience in Singapore, and maybe give us a compare and contrast. You were a consultant at one time, so you would have encountered more North American management teams, I presume, is that right? Than say Asians. Yeah,
I would say that during my time in Singapore, I obviously got a chance to visit in person a lot of the Asian countries, just because it was close by. So examples would be Japan, Malaysia, Thailand, Australia, which isn't an Asian country, but in APAC, and Singapore, of course. And there are definitely, so sitting in the global small cap seat, we speak with companies everywhere around the world. And there's definitely cultural differences and similarities in management teams. So without drawing a broad brush, obviously, my observation has been that in Japan, as an example, if you do a management interview just through the phone, you will have to use a translator. And that, for example, can take a lot of time, and you won't get as much out of it versus if you actually go visit them in person. And what I find interesting is when you actually go visit Japanese companies in person, they give you English materials that are not available on the website. So there's actually a big benefit to visiting them because you'll get investor presentations and resources that you would not have otherwise been able to find anywhere else because they just don't share it on their website. In general, my observation has been the culture as it relates to focus on return on capital, on minority shareholders, is quite similar in sort of the US, UK, Australia, South Africa, and Sweden, and sort of Norway and those countries in particular, whereas it can be a little bit different in other parts of the world. So in Japan, again, the observation is that my sense for it is they're more optimizing around duration of the business. So they want to make sure that this business is around for a really long time and it maintains its relationships and maintains its employees without firing them for a really long time versus going from 8% ROE to 9%, which might be more of the focus in the US, which is why you see a big disparity in debt levels too. So many Japanese companies will have a net cash position, whereas many US companies will be levered 3, 4, 5 times EBITDA. So, yeah.
It's good. Some nuances in Japan that Dave Reagan didn't mention in his podcast about Japan. So
I know he doesn't like Japan as much, but I sort of view it as a trade-off between, lower return on equity, but perhaps more durability and safety. Yeah. So it's a slightly different.
First time I heard it phrased that way. So I think
some of the countries, I guess, are also very entrepreneurial. So like Indian companies, for example, many of them are family-owned and the family will be quite entrepreneurial. And other ones too, when I went to Malaysia, for example, I went to Penang. I would never have thought of going there if I was, I guess, out here. But from the Singapore office, it's very close. And Penang is sort of a hub for machine vision technology, surprisingly. So a lot of the iPhones, when they're getting made, the cameras have to be tested in an industrial process. And the leading companies around the world that make the machines that test the cameras, they're made in Penang. So they have a massive exposure to the semiconductor industry and to the phone industry. And that whole ecosystem is set up there. So when you go visit them, you can visit a lot of these smaller companies that are doing it, led by entrepreneurial teams. And surprisingly, I found that in Thailand, Malaysia, a lot of these countries, India, English is very widely spoken. So you don't need to translate in any of these countries. You can easily get around in English and conduct management interviews in English too.
So as you're describing all that, Japan and Malaysia and other areas that you were able to visit in Singapore, the question occurs to me is how do you capture this information that you gather from a management interview? So
usually we would type up notes of the conversation. So we would have a record of the key points that were said and what people were saying. Also on site visits, most people take pictures and we can share that on our internal database too. The way it would work is, let's say I speak with a couple companies that I find interesting. I'll type up the notes, I'll put them on our internal database, and on that database I can then tag them. So I can put them specific to the company I'm speaking to, but I can also tag industries and other companies that are related. So other folks on the platform it will show up for them if it's a company in their industry or related to the companies that they own, so they can review that as well. And in terms of synthesis, I guess, yes, typically in Global Small Cap, and I've observed in many other teams as well, we like to have a summary or takeaways on, what was my initial impression after this? In general, I found that we try to not be too judgmental. And the reason for that is because often it can color someone else's perspective on a company. So let's say I speak with a new company and I say, oh, this is a terrible company, or this is a wonderful company. Someone else at some point may revisit and speak with them again, and they'll read my notes. And if I said it's a terrible company, I might be wrong. And I don't want to color their view on it too much. That said, I will provide some thoughts around it. And we systematically in Global Small Cap, after every management interview, especially for new companies, we'll rank it on the matrix. So the matrix is sort of our internal tool, which is quality relative to value. So we'll rank each sort of aspect of the business on a scale of 1 to 5 or 0 to 5 on what we think. And that will be sort of our way of providing an opinion of what we think the company is doing.
Great. We've dug pretty deep in terms of the process. What might illustrate everything in one encapsulated little conversation would be for you to walk us through one of your, I guess, favorite management interviews of 177. I'm going to ask you to pick one. Maybe just walk us through one example of an interview that went well and what you did.
Sure. So one interview or response that stands out would be with what Paul Maraza, CIO, categorizes as an architect manager. So in his world, he sort of categorizes two archetypes for managers, either an administrator or an architect. And what I mean by that is an architect would be sort of a real steward of capital. So someone entrepreneurial who started the business, or a financial genius, for example, and they have a blueprint. They have a plan that they tell you at the beginning when they started this business or they took over, that this is what I want to do. This is why I think it will work. And then they go and execute on it as an architect.
Would Steve Jobs be one? Or
sure. So Steve
Bill
Jobs
Gates
could be one, but more sort of tangible examples in our portfolio would be Constellation Software, Mark Leonard. So he's an architect, but a financial architect specifically. Another one would be the person I spoke with, which is Matthias at VZ Financial. And he built this business from scratch, and I'll go into the details of what they do, but he's more of an entrepreneur, customer-focused type of architect. Jeff Bezos is an obvious one that everyone knows. So that's sort of an architect. And on the other hand, you get administrators. And an administrator is someone that's more like a caretaker. So they come into a really strong business with a franchise and they make sure that the culture and the competitive position is maintained, but they'll often return all the excess capital instead of redeploying it and wasting it. So that doesn't mean that they're bad managers. It just means that they're not sort of architects. They're just caretakers, making sure that the train doesn't come off the rails. So the interview that I had was with someone who I believe is an architect, and it was Matthias at VZ Holdings. And VZ Holdings, for context, it's a Switzerland-based private wealth and robo-advisor that we have ownership in the global small cap portfolio. And what stood out was, I asked them a pretty high-level question about how they can maintain really thick margins given that it's such a competitive industry. So how are you able to do it? What's the secret sauce? And he's a gentleman that started this business from scratch many years ago, and it's huge now, and it continues to grow. And he really very clearly explained what the idea was and what the business model was. So, he said from the beginning, he's been building a business where their approach to client acquisition is substantially lower cost than their competitors. So what that means is that unlike many other private wealth advisors in Switzerland, they hire really smart young people out of school. They train them how to be really good financial advisors or financial consultants. And then they provide that advice on an hourly fee basis to customers that just want tax advice or inheritance advice, things like that. And if they're really happy, then there is an option to then convert them to a wealth management client, but it's not an obligation. So they lead with the actual advice, and you still pay for the advice, but it's not a big profit center. And if they do a really good job, then they can come on as a wealth management client where the margins are a lot thicker. Now you'd compare and contrast this with a usual private manager in Switzerland where they have very high cost advisors that are highly incentivized to get them as a wealth management client, right? So that sort of customer acquisition cost is materially different. And he went in and built the business based on that. And he's created sort of this low-cost flywheel effect where he keeps getting more customers and he's able to reinvest in the business to offer better products for them as he scales.
I'm going to ask you to do kind of a top two answers and a bottom two answers of any management interview you've had.
Well, that was one of my top answers. One of the bottom answers maybe would be surprisingly with the chairman of the board at a company. So again, we not only speak with the actual investor relations, but sometimes the CFO, the CEO, but also board directors. And even if we want to triangulate, sometimes the old company that a CEO worked at to get a reference check to see if they did a good job there. So this was the chairman of a board. And when I asked how they decided on some of the remuneration metrics for their bonus plan, the response was mainly that they developed it based on advice from consultants and just went with what was used historically, if I was to paraphrase, which didn't seem particularly thoughtful for a chairman. And then when I later asked, what could you do to improve the board, or which areas would you like more expertise in and add board members, the reply was good question, followed by a deep pause, and then off the cuff, I'm not sure I can give you a good answer to that. So again, these weren't necessarily, depending on the business, it's not necessarily like you kill the idea, but at the same time, if that's your corporate governance and that's your board, then it's not the greatest rating you can give.
Gotcha. So I'm thinking based on that example that sometimes no answer is a complete answer.
Yeah, and it can be tough, right? Because depending on the person you're speaking with, sometimes they may not know. So if you're speaking with a relatively new investor relations person and you decide to ask them a question like, why do you generate higher returns, or how do you measure customer satisfaction? They may not know, right? But a CEO, for example, should know something like that. Or if you ask a governance question to the board of directors, they should have thought about it, hopefully. So yeah, sometimes no answer is an answer. Either it means that they haven't thought about it before, or it means that they don't want to share that with potential partial owners in the business, which means something as well.
Well, Karan, I think you've given us a great rundown of how we conduct a management interview at More. You've given us the art of the interview, right down to some specific questions. So thank you for joining us on the podcast. Really appreciate it.
Thanks for having me.
Okay, and you're not done yet.
Okay.
What we like to finish with is one more thought, and this is where we ask you, I guess, one personal question and personal interest question, and get you to try and relate it to investing. So I was told you're a fan of the show Billions, which admittedly I've watched about 3 minutes and 26 seconds of a segment called Never Settle. So I don't know if you remember that one. But what I want to ask you is there a favorite quote out of that show that really rings true for you?
You have to watch it for a bit longer to get into it, I'll admit. It's a little bit over the top, but that's kind of why I like it.
Okay.
So I got two ones, I think, quick ones as they relate to management. So the first one is, sometimes you just got to trust people to be who they are. And what that means to me is, if a management team has a track record of making poor decisions and squandering shareholder capital, then you've got to trust that they're going to keep doing that. So that's the first one. And then the other one, a bit lighter, it's very easy sitting on the other side of the table as an investor to forget that building great companies is really hard work. And we probably couldn't do it just as public market investors. And everyone has an opinion on how you should run your business. So this was one from Bobby Axelrod, who's the main guy in the show.
Fast Bobby.
Yeah, exactly. And his sort of quote was, lots of guys watch Bruce Lee movies, doesn't mean they can do karate. So that's my other one.
There you go. All right, we'll end it on karate. So thanks again for joining us. It was fantastic.
Thanks for having me, Cam.
Hey everyone, Cam here again. To subscribe to the Art of Boring podcast, go to more, that's mawer.com/podcast. If you enjoyed this episode, leave a review on iTunes, which will help more people discover the Be Boring, Make Money philosophy. Again, thanks for listening.